Okay, good morning, everyone. Stock market technical analysis. That's what this channel is all about. We're going to get into the general market. So we'll start out with the broad market indices, and then we'll narrow it down to some individual trade ideas. I've got a couple new ones I want to point out, so I'll point those out later on in the video. Stay tuned for that. Those are trade setups, so they're not actionable yet, but there's opportunity there if we get a trigger. So I want to point those out before that entry trigger shows up, so that everyone has the opportunity to act accordingly and hopefully profit on it. So as we get into this, guys, if you find value in the content, leave me a thumbs up. I do appreciate that. Triple Qs. Okay, so we're watching, this is an hourly chart, and we're really just watching this bearish rising wedge that's been building for quite some time. You can see lots of reactions on this lower trend line that I've got marked in blue here. You can see 1, 2, 3, 4, and we're right down at it again today. So this is where the buyers should be at. We're not breaking impulsively, so I would expect they're likely going to probably try to hold it here and maybe bounce, but I am expecting this to break eventually. So watch for this trend line to break with a nice impulsive breakdown. That's your sell signal. Looking at the daily, you can see here's the bearish rising wedge right here. And this bearish rising wedge, as I zoom in, or really zoom out, you can see we've just been building negative divergence. This is a new divergent high right in this area. So we have the negative divergence started to show up right here, basically right about there in December of 2020 is where we started to have negative divergence, and it's really been building ever since. So this whole price action, basically since there, has been negative divergence. So we're looking for a break of trendline support, and we got that break of trendline support off a larger trend line coming from the March 2020 lows. You can see we held support here, here, and here. Then we broke, so there's your breakdown, and we created the secondary back test and secondary channel basically, which is a bearish rising wedge. We're now looking for the sell signal for this to break. So you can see it's kind of starting to break today. It's not impulsive yet, so you want to see that impulsive selling show up to confirm a sell signal. So just going back to the hourly chart, right there, we're at trendline support. An impulsive break would be the sell signal that I'm looking for to start the next correction in tech. Okay, so maybe we'll get that today, maybe not. You can see the hourly chart is starting to break that trend line. So we're looking for that impulsive breakdown. All right, moving on to SPY. Now, SPY's likely going to follow what the Qs does because the heavy weighting of those FANG stocks in the Qs and tech basically is the largest sector and the heaviest weighted sector in the S&P 500. So S&P 500 on the daily chart, you've got this is coming off your March 2020 lows, this green trend line, held support here, held support, held support. And we finally broke. There's your break of trendline support. When we broke, we had negative divergence showing up on the RSI and the PPO. And then we did this back test, but we weren't able to really recover the trend line. We just kept back testing it for about 2 weeks. I am looking for an impulsive breakdown on this as well. Okay, here's a new trade idea. Now, this is not actionable yet, but we have a potential setup here. So BlackRock, it's they're a hedge fund. I think they buy real estate and do banking and stuff. They're like an investment bank kind of stock. And they basically, you can see we have an uptrend line coming off the March 2020 lows on the daily chart. Tag of support here, kind of got close right there. Tag support here. And recently we're just riding right there on that support line. So I'm looking for that to break. And the reason why I'm looking for that one to break is we have negative divergence right here. So you can see how the momentum on the RSI and the PPO has been dropping off. So we have negative divergence, which means that this was a divergent high, this is a divergent high, and this was a divergent high. So we're now looking for that impulsive sell signal, that closing daily candle that's a break of the trendline support. Okay, so I think that's going to show up. I don't know if we'll get it today, but look for that here in the near future. And when we get that, then we'll watch for, we've got some support right here at about, it's right in there. Oh, sorry, wrong tool. But the support is right here, somewhere right in there at 790.25. So that would be the first target on the break. And just down to that first target, if we're to break soon, would be a drop of about 10, it's almost 11%. So we'll watch that. I'll add some additional levels if this starts to go as we start to head south. And American Eagle, AEO, you can see we're basically coming down to trendline support right now. It's down 4.5%, but still just coming right down to trendline support. So until that breaks, I'm not interested in shorting it. I think we're going to get it. You have a daily chart here, uptrend line right there. You have negative divergence up here at the highs. So see the negative divergence showing up. We're looking for a break of this trend line support, some sort of gap down or impulsive sell down through that trend line. First target on that one is 30.62. Second target, 25.97, about 26. Again, what you want to do if you're shorting something, you do want to step in and cover just a little bit early. You always want to cover a little bit early so that you're not trying to squeeze the very last penny out of a trade. You want to make sure you're locking your profit in as you approach those support levels. So likely the way this will work is we'll break, we'll run down, we'll hit this, maybe chop around a little bit, maybe bounce up. Then we'll come back down, and eventually we'll be down here to that second target. So let's give an update on SQ. I haven't talked about this one for a while. Again, SQ on the daily chart, you have an uptrend line right there on the daily. This goes all the way back to September 17th. Lots of reactions on that support line. And then we broke. So we had negative divergence building for quite some time. And then we finally broke trendline support right there. So we broke, came up for a back test. I got that back test circled right there. It just back tested for a couple of weeks, basically right in here. And so far we are continuing to get, rejected, and that back test is failing. So as far as I can tell, SQ is going to do this. Not all at once, we're going to probably chop around to get down there. But it looks like we're heading back down to that support. That support is sitting at 193 area. Likely we'll get a reaction there. But this will be our second time approaching that. So I think we'll break through there, head down to the next level of support, which is about 170.52. Okay, DraftKings. So yesterday, DraftKings closed at support. I think we're going lower and probably today. But DraftKings, you have this uptrend line right here. You can see clean uptrend line. Looks very familiar to like SQ. We broke that trend line support. When we did that, we had negative divergence building. So the negative divergence was telling me that we're likely going to reverse trend. So then we broke the trend line support, came up for a back test, little bounce the second time, couldn't even get a full back test, and we're back down at support, closing at support yesterday at 44.58. So I took half my short off yesterday for almost a 10% gain. And then I'm looking to probably add back that half of the short if we continue to break. We get some sort of impulsive break from this level 44.50 area that we're at right now. So if it wants to sell down and break here, then I think we're heading down to the next level of support, which is, as far as I can tell, 35.50, the next level. So that's what I'm looking for. Okay, MGM. So this has been a short trade really since, we shorted this thing on July 6th, but I've been talking about it for a few weeks ahead of that as a potential short trade. So here, this was your sell signal right here. We had negative divergence. I have those kind of circled. Each one of those new highs is a higher high in price and yet a lower high in momentum. Guys, if you're new to these concepts of technical analysis, what I'm talking about with divergences, check out my technical analysis course. I put a link in the description below. That will give you, it's about 5 or 6 hours of video training that will give you more advanced knowledge in technical analysis. Okay, so MGM is breaking today. What I saw is kind of the near-term support, and it wasn't really the cleanest support, but right here at 39.70, we had a lot of reactions around that level. So I marked that out, and we did get a reaction when we came right down to it. You can see the bounce that we got, but now we're selling back down. We're back down through that. I suspect that this is going to, hold below today, and we're going to head down to the next level of support, which is about 36.70 right there. So I do like that. Now this one has a really good level of support right here at about 34. So that's going to be the target for right now, is this 34 area. right there. And from where we're at now, it's a continued drop of another 12, 13% or so. So all in all, that looks good to the downside. You can see it's pointed down, prices moving down, everything looks good. Okay, don't talk about oil too often, but oil looks like it's going to be a short here pretty soon, and that, I believe, is going to be consistent with a market correction as well. Oil often behaves very similar to, it's a growth story, right? So if the market is, if oil is doing well, then it's economic growth, economic reflation, and that's kind of the growth story that we've been hearing about. I think more of the story is more about inflation of raw materials, which actually can be a drag on economic growth because the input prices that companies when they make products or need to use some sort of commodity, that it's more expensive, so it creates a higher expense for them. And if they can't raise their prices and they don't have pricing power, then they're not able to, then they have to eat that. It's less profit for the company. So oil, back to the oil chart, I just want to point this out. We're looking at oil futures. You can see we have negative divergence on the RSI and the PPO. So this price action all up through here is a divergent high, which means new high in price, lower high in the momentum indicators. I've got a trend line coming off of the October, it's about November timeframe of 2020. And I've got one tag, and then right here we're kind of getting another reaction. So this is the trend line to watch as far as I can tell. I can't really make another trend line. So far I'm just looking for that and looking for this to break, an impulsive break. Now, no sell signal yet, so no reason to short this thing. But, as I scan through some of these other ones like DRIP, so this is a 2 times, sorry, it used to be 3, but it's a 2 times leveraged short on oil. So you go long DRIP. If you think oil is going to sell off, then DRIP will go up. All right, it's an inverse ETF. So you go long DRIP when you think oil is going to sell off. And I've got this short-term daily downtrend here with bullish divergence. See the bullish momentum? See the RSI and the PPO, how we're making bullish divergence? And this is divergent lows. You look for a break of trendline support. We broke it right there a couple days ago. I didn't point it out, but I did see it. And so far, we're uptrending. So that looks like good. You got a level of resistance right here at 955. So you get through that, and I think you're heading up to about 13, about 14. Let's call it 14, which is a pretty big rise. If you look at kind of where we're at now up to there, that's a move of 62%. So that would be the target, most likely, a rise up to there. But we haven't seen oil break yet, so just keep an eye on that. Longer term, I'm bullish oil, but oil's had a pretty good rise, so I think it could correct, kind of wash out some of the weak hands, just like some of these commodities have done. Okay, we'll wrap up here with Lyft, and then I want to just loop real quick back to triple Qs. But Lyft, so again, we have an uptrend line right there on Lyft on the daily chart, all right? And we were putting in negative divergence as we were grinding higher. These were divergent highs on the RSI and the PPO. See the momentum dropping off? So that was telling us we were likely going to get a reversal in trend. We were looking for the sell signal. It came right there. There's your big breakdown candle sell signal. That's what a sell signal looks like, okay? Big, nice, nasty breakdown candle. Okay, then you can, and usually, and more selling, behind that is just confirmation. So nice, lots of selling. Then you came in for a back test. They couldn't quite give a full back test. The sellers kept stepping in early, and it never really got up to that trend line. But since then, it's already started to reverse. We're starting to sell back down, and we are, as far as I can tell, heading lower. The target that I would have for this, so you've got a good level of support. There's some support right here at 50.46, and then there's a little bit of support right there, and then there's a little bit of support right down here at 43.50. But you can see there's a huge gap right here. I have it circled, and I would really say that is going to be the final target, would be a gap fill down at 32.06. So likely we'd work our way down, get reactions on those support levels that I talked about, but ultimately end up filling that gap or at least getting close. So that would be the target. If I was going to short this thing, I would look for shorting it all the way down to gap fill for a swing target. And then I just want to wrap up real quick by going back through the cues, and you can see they're holding that trend line so far. You can see on the hourly we dip below it, but no hourly closes below. So no breakdown, no sell signal. We just have to continue to wait. The buyers are right in this area trying to hold this support. And again, I don't think we're likely going to break this trend until, I think if we do break, it's going to come in the form of a gap down, and likely that's going to happen after some of these big tech companies report earnings. And that's coming up here. I think that's next week, or it might be the following week. We'll start getting into those big tech earnings. So we're likely going to hold this pattern, this bearish rising wedge pattern, until we hear from those companies with earnings. All right, that's all I have today, guys. Leave me a thumbs up if you found some value in the content. Check out the training course if you haven't done so. Link in the description below. Leave a comment on anything you want me to look at. I kind of scan through those and look for interesting stocks and setups from subscribers. And I will catch you guys on the next one. Bye.